Welcome to Starboard TCN Worldwide's video podcast for March of 2012. Today we're going to be speaking to Frank Vella, our senior leasing and sales investment broker here at Starboard, to talk about San Mateo County and what's going on in that market. Hello Frank, how you doing?
Good morning, I'm doing great.
Yes. So let's talk about the San Francisco market against the San Mateo market. Right now there's a boom in the San Francisco tech market, office market. Are you seeing that in San Mateo? What's going on there?
We're not seeing so much of a boom, but some overflow with clients or tenants who are looking in the San Francisco market and those coming out of the Santa Clara, San Jose market. And San Mateo, Foster City, Burlingame is usually their next alternative. It's got good transportation, good access by public transportation. Highway 92, 101, 280 intersects a lot of availability out in the northern San Mateo County. But it's usually a secondary location for these businesses because most want a San Francisco address or Palo Alto, Redwood City, true Silicon Valley addresses. And the product out there for those type of tech clients are usually dated, usually drop ceiling office space, kind of traditional, and a lot of the newer tech companies are looking for something more warehouse feel. So a lot of those properties really don't work for them. But it does, price-wise it's a little cheaper, its availability is there as opposed to some things in San Francisco and Silicon Valley.
Are you seeing these 40% increases in rent as we've seen in San Francisco in a little less than a year? Are you seeing those kind of increases? Are you seeing steady increases? What are you seeing in terms of rental rate?
We've seen slight increases with properties out there. Most of the properties are fairly full, and those that are not are usually fairly dated, with owners having a lack of funding to be able to spruce those things up and bring those buildings up to modern standards. So no big price increases right now, but things are holding firm. There's not a lot of new product at all out there, so owners are kind of stable with what they're doing.
Are you seeing the same kind of situation where tenants are looking for shorter term leases, or are you seeing them going and still holding to a 5-year type of traditional type of lease?
Absolutely, we're seeing a lot of short-term type of tenants out there. They're looking for non-committal. Usually these tenants are startups with not a lot of financing either. They're sometimes ex-employees from larger companies or groups that are trying to branch out on their own. A lot of people who are starting up with, from small tech companies that are pretty basic, and so they can't commit to the short term. They always have a want to be able to grow in case they do grow, or maybe possibly get bought out. So a lot are usually looking for short terms. There's a lot of larger tenants out in the peninsula too, but the peninsula lacks the large size space that's available for large companies.
And what about the biotech industry in South San Francisco? Is that competing against the tech, or is it really its own microcosm of its own business there? How does that work?
From what we've seen, it really does compete with some of the tech industry, but the biotech hasn't taken off as quickly or as hard as I think that was predicted. So we still have a lot of space out there. There's some things coming up, but I think a lot of investment and expansion right now is just on hold with economy fears and all that. That's what we're finding.
So what about the North County of San Mateo versus the South County of San Mateo? So you've really got that Foster City market, that 92 corridor market, against going up to South San Francisco. What are the differences in rental rates and the market there?
Rental rates seem to be fairly similar with Class A, A- type buildings, but I think my kind of deciphering point or geographical line there with North and South is San Mateo, Foster City is more of the kind of middle going north, and then you go up into Brisbane, South San Francisco. Companies who are out there usually have to be really large because amenities out in that area aren't that great. So most of these businesses like to be sort of downtown. They love to be walking distance. But South City, Brisbane, it's really hard to make that sale for those companies. and amenities to their employees. Foster City, San Mateo seems to attract a different type of client or tenant who needs that 92 corridor. It is more central to the South Bay. You've got a little bit more access, but not a whole lot, to the commuter trains, to BART. And parking's good though, in San Mateo, Foster City, and Burlingame. So is South San Francisco. But again, it's those geographical distances that really make these companies think twice, even if it's only going another 10, 15 minutes on the highway.
So Frank, how is the retail market doing in San Mateo?
Downtown San Mateo retail market is excellent. There's a big demand to be downtown. South B Street, if you go there at night, it's lit up. There's a great amount of restaurants, amenities, the theater's doing well. There's a lot of demand down there, and the prices are high, and you see a bit of turnover for those restaurants or retail establishments that just can't make it. But if you haven't been downtown San Mateo quite some time, go there, especially at nighttime. There's some great places to visit and eat. The rest of the county is sort of stuck because, again, it's older product. There's not much availability out there. And so it prohibits a lot of new businesses opening up in some of these older establishments. Tanforan, San Bruno has really undergone a nice change. There's a little complex across from Tanforan, right by 92, that's done quite well with the restaurant, investment company, and they're looking really good. So biggest problem for tenants is finding a location and knowing that location is going to work for them, because a lot of times even a restaurant just takes so much money to go in there and rehab these places. They're hesitant and they don't move forward. So I think lack of availability is just spurring or making it hard for these companies to make a move. So
Westlake Shopping Center, major renovation has occurred. They've expanded the Safeway there. It seems like that's booming. Daly City is trying to renovate their corridor on the Mission Street side. Is that working?
Those are working. Those are great improvements as far as new updated centers. Westlake looks fantastic. They're fairly booked up there. I don't know of any vacancies right now. Home Depot went in there. It looks really good. The restaurants nearby are thriving. It's always a busy center. Mission Street, Daly City's done a great job with encouraging businesses and renovating that area of Mission Street, especially up to top of the hill, Daly City. So that's been good for Daly City. But again, it's lack of product. You come off of El Camino and you don't have any real busy areas where most of these retails like to be. Ceremony Center is always undergoing changes. Metro Center is still one of the top producing, retail sites in the country. Down below, Target looks like it's doing great. That whole center there is doing well. Ceremony Boulevard, the old auto sales places, some are being taken over by like Dollar Store, and it's bustling. It's a great little area for retail.
Now, what's going on with the closing of Sarah Bowl? That was such a shock to me, being a kid that had gone bowled there, and they're talking about losing their lease for development.
Sarah Bowl just announced 2 weeks ago that they're closing, and they're closing in April, apparently. They announced that to the leagues there, because those guys basically got to get out. That's been under a long-term lease at a real low rate, and the owner has owned that property forever. The lease came up, you couldn't renew, and apparently it will be undergoing development. I believe residential is the plan, but there's also a main water line that goes to San Francisco right under that property, so it can't be fully developed out. That water line's got to have access to it, and so that's going to hinder a development project in a way. Bowling alleys just can't make it in this high cost area. It's really hard. Yet that was one of the highest grossing bowling alleys in California. For a number of years they had a really inexpensive lease. So it's going to displace a lot of happy bowlers.
I learned how to bowl there. So with the commercial market now stabilizing and growing in San Mateo as a whole, how's it affected the residential market and the rental market in San Mateo County?
It's affected it dramatically. We've got a really strong buying base on the residential side, and through commercial, a lot of times we're helping out high-end clients look for high-end properties. Lately we've been involved with Palo Alto, for instance, and house prices there have just been extraordinarily strong. Multiple offers on many properties if they're in good shape, priced at market, and it doesn't matter if they're $600,000 homes to $3 million homes. Recently we just heard of an escrow being open on a property that was on the market just a few days, got 60 offers, over 50% of those were all cash, and it sold for $300,000 over their 2.7 asking price.
Can you believe that?
It's amazing. Rental prices, residential has been pretty much through the roof. Small. Yesterday I was speaking with a property owner who rented out a 800 square foot studio for $1,000 a month on the coast, and he had 20 offers on an open house, and he had to take that off the market because he was getting so much activity. Rentals are really hard to find. You've got a lot of people going through the short sale foreclosure process, and they need to move someplace, and so prices have been through the roof. Probably for a basic 3 and 2 in northern San Mateo County, you're going to be spending at least $2,500 to $2,700 a month. In the southern part of the county, you could probably start at about $3,000 a month to $35,000 for a basic 1,100-1,200 square foot home.
So we hear the stories about financing still being tough for people to buy homes, but you're talking about all cash buyers here. Now, those are obviously pricings above $2 or $3 million, but the middle class home, that home in the $500,000 to $800,000 range, does it exist? Is a short sale market there still for people to take advantage of, or is it all dried up?
Probably 50% of all the listings out there right now on the residential market that we've seen have been either short sales or foreclosures. Buyers have been coming in with financing, but the majority are being sold all cash, and a lot of people are purchasing some of these properties that are bank foreclosures and or short sales under market because there is work that needs to be done, and some financing won't cover things that are major components of livability. You know, if it's got a water heater out, or doesn't have a stove, or needs a tremendous amount of dry rot work, financing isn't going to work. And unless buyers are stellar credit and stellar assets, all cash buyers are still king.
So even with these recession and tough times, people still have cash.
It seems like it's coming from foreign markets. It's also coming from people who are changing their investment portfolio from going to stocks to solid assets like homes. We spoke with a financial planner and a stockbroker whose clients are taking their money and putting it in hard properties, residential, for investment purposes. They're diversifying, so that's driving the market too. And then we have things like Facebook with their IPO, and there are hundreds of people who are going to become millionaires or close to it, and that's driving up the market. So we got a lot of factors that are increasing prices.
So San Francisco and San Mateo County, against the rest of the country, seems to be doing awful well.
We're still one of the hottest markets in the country. Things are strong here, and yeah, we're holding our own, if not increasing on some points. Yeah.
Thank you, Frank. We really appreciate it. And this ends Starboard TCN's video podcast for March 2012. If you're interested in learning more about Starboard, you can visit us on our website at starboardnet.com. Thank you so much for listening.